In today's video, I'll be going over the top 10 stocks on Wealthsimple Trade and what I think about each of these companies on there. As well as I might go over a bonus 5 or even a bonus 10 at the end of the video, so stick around to find out. If you guys are new here, my name is Daniel, and here on this channel, we talk about growth stock investing with a focus in Canadian markets. So if that's something you're interested in, consider subscribing to my channel. As well as if you want to see what I'm doing each and every day in the markets, be sure to check out my Patreon group. And if you're new to the stock markets, I have a free course down below if you sign up with a link to Skillshare, which will give you 14 days of access to the course. So jumping into the list of the top 10 stocks on Wealthsimple Trade. The first one we have today is Air Canada. And Air Canada trades at $21.27. It was up 4.16% today. In my opinion on Air Canada right now is I think that it's a long-term recovery play. You're probably not going to see instant gains from this company just because the pandemic is still rampant. And the time that we get back to air travel, I think it's probably going to be at least like a year from now, if not more than that. And on top of that, Air Canada is going to have to recuperate all the losses that they've incurred over the past year, which the country has been locked down for. The next stock on this list is GameStop. And GameStop has been a hot stock with Wall Street bets. However, recently it's cooled down from a high price of $500 per share to $90 per share today. And it dropped even further in the after hours. In my opinion on GameStop right now is honestly, it's a bit of a Russian roulette. People say that there's still a fairly high short interest, and if more Robinhood investors, Webull investors, M1 Finance investors, as well as Wealthsimple investors buy into GameStop, this could drive the prices even higher and cause the remaining shorts to actually cover, sending the price up even further. However, this is a fairly big gamble right now because short interests seem to have been going down over the past couple of days. S3 Capital or S3 Partners has reported that the short interest today is sitting around 53% or so versus 140%, which we saw just like last week. So I think right now GameStop is a bit of a gamble, and you're hoping that the Wall Street bets hype continues on and it somehow recovers. There's a little bit of saving grace in all this, as I do think it's possible, however improbable, that the fact that people are moving their money away from Robinhood and into other brokerages such as Webull or M1 Finance or TD or Fidelity over in the States, this takes a little bit of time, which is possibly why we're seeing lower volumes right now. But another thing to note is Robinhood is still, I believe, the #1 downloaded app on the App Store, which makes me believe that it's possibly not the case. So this is up to you whether you want to risk your money in GameStop or not. The third stock on this list today is Tesla, and they're trading at $872.79. And Tesla always trades at a premium just because of their culture of innovation and their CEO Elon Musk. So if you're looking to get into Tesla, you're never going to really find it for cheap unless we see a major stock market crash or a recession. Then you might be able to get Tesla for a fairly steep discount. But if you're looking regularly to buy into Tesla, now is the time to maybe dollar cost average. I personally wouldn't dollar cost average into Tesla right now. I would wait for a bit more of a dip, as it's a little bit risky to buy on the highs. The fourth stock we have here is BlackBerry. And BlackBerry also rode the same wave as GME, AMC, and all those other meme stocks on Wall Street bets. So right now I think BlackBerry, the business outlook seems like it could be going somewhere just because of their partnership with Amazon and the fact that self-driving cars are coming whether you like it or not. And BlackBerry software is going to help the software in these self-driving cars stay secure such that hackers can't get in. And the worst thing that could happen is, let's say a Russian hacker hacks into all the cars in a major city, installs traffic, and could essentially end up starting a cyber warfare, which actually has real life consequences because now they're controlling physical objects. So I can see BlackBerry software being useful in the future. However, right now with the recent run-up, it is a bit of a risk to get in, as the bear sentiment was quite large on BlackBerry over the past 5 years or so. So right now I'd say BlackBerry is a speculative buy if you're looking to get in. The fifth stock on this list is AMC, which also follows the same trends as GME and BlackBerry. So I think for AMC, it's a similar story for GME or GameStop. If you buy in right now, it's a bit of a risk. However, you're kind of banking that retail investors will have a comeback and they will have some more resurgence in diamond hands showing up and buying up the stock. But I wouldn't be holding my breath for this. If you have some in the green right now, maybe consider taking profits. If your AMC's in the red, maybe consider taking some losses that you can write off next year during tax season. Next up, we have Apple. And Apple is a fan favorite for every stock market investor. Everyone knows Apple, everyone loves Apple. I use Apple products. So honestly, there's not too much that could go wrong if you buy into Apple. They have such a strong ecosystem, and their software business is also ramping up dramatically right now. So I think that there's only good things in store for Apple, at least for the next 5 to 10 years. Apple has a lot of other innovation coming up, and I think they're a fairly well run company, and they do pay a dividend. So buying into Apple, even though it's at all-time highs today, it's probably a good idea to dollar cost average if this is a position that you want to start. The seventh stock on this list is Cineplex. Today they're trading at $10.32, and they didn't have the same wave as AMC, unfortunately. There wasn't the same short squeeze as the other stocks. However, Cineplex I think is a favorite for Wealthsimple trade investors just because it's a brand that they know and love. People used to love going to the movies before the pandemic happened. However, since it's happened, Cineplex has been taking a beating. They were actually going to be bought out by a UK theater company. However, that deal didn't go through, and that sent Cineplex stock price all the way down to rock bottoms of I think $5 to $6 per share. Nokia is the next stock on this list, and this is again another GME as well as AMC stock. Nokia has had volatile trading these past few days just because of the short interest in Nokia and people speculating on a squeeze. I don't have much more to say about Nokia. I don't think it's a great business to invest in, and I think it's a bit more riskier than AMC and GME because it hasn't gotten as much attention versus the other two. Second last stock on this list is Suncor Energy. And this stock today trades at $21.55. And honestly, this is a stock that I would never buy. You could say that oil stocks are beaten down right now, and maybe it's good to buy on this massive dip. However, we know the world is moving away from oil, and I think just the total addressable market for oil is going to shrink and shrink and shrink over time. People realize that global warming is happening, and people are going on this bandwagon and trying to become more green. So things don't look very bright for Suncor Energy, and I think the fact that they're a fairly old and established company, it's going to be very hard for them to pivot and innovate. And for that reason, I never plan to buy Suncor Energy. The 10th stock and final stock on this list is TD. And TD trades for $73.90 today. It's probably one of the strongest banks in Canada, if not the strongest. And honestly, I do prefer it over like even Royal Bank, which is the number one bank in Canada. TD has been doing its US expansion and growing its business in the States, which is a good tailwind for TD. However, the financial institutions are starting to see some disruption from technology stocks. And these include companies like Wealthsimple Trade, Square, and PayPal in the States. So banks, they might have a good foothold right now. However, if they don't somehow innovate or pivot, they are going to become dinosaurs one day. So if you're looking to buy into TD, it's honestly a dividend play, but I wouldn't go gung-ho into the stock. I would suggest maybe having a small portion, like 5% of your portfolio at most, if you're looking for a juicy dividend. Now we've got some rapid fire. We're going to go through the next 10 stocks and what I think about them. So NEO comes in at 11, and honestly, I don't really like the company itself. They don't do their own manufacturing, and I think that's a very big downfall to them. And they don't have many sales to show for their massive market cap. People are betting they're supposed to beat Tesla, but I think no chance. Drone Delivery Canada comes in at number 12, and they traded at $1.36. And I sold my Drone Delivery Canada at $1.50. I think this company continues to dilute shareholders, and it really makes me, nervous as a shareholder buying into the stock for the long term because we don't know when they're actually going to be able to turn a profit. They have like $60,000 of revenue for a company who's been raising millions and millions of dollars off of shareholders' backs for the past 3 to 4 years or so. Enbridge is number 13, again another oil and gas stock. Not my favorite, would never buy into it. They do have a juicy dividend though. So if you're looking just for preservation of capital and a juicy dividend, Enbridge might be a good play for the next 5 to 10 years, but after that, consider ditching it for something a little bit better. We have VFE coming in at number 14, and this is my favorite S&P 500 fund. If I were to invest in ETFs, this would be the one fund that I would invest in because it mirrors the S&P 500. I used to hold some VFE, however, I ended up selling it off just because I wanted to do individual stock picking. But for any beginners out there, VFE is a great place to start. Microsoft Corporation comes in at number 15, and they trade at $239.51 today. Microsoft has been a tech beast, and right now they're number 2 or 3 in the United States in terms of market cap. Microsoft, I believe, is a good long-term hold, and they do pay a dividend. Shopify comes in at number 16, and this is one of my favorite Canadian growth stocks out there. Shopify has a very exciting opportunity ahead of it. They have different verticals to their business that are only going to propel their e-commerce offerings in the future, and I think they'll continue to be the largest e-commerce solution provider in the future, and they will be number 1 over the next 20 to 30 years. So I'm super bullish on Shopify, and I'm holding my shares for dear life. After Shopify, we have Amazon, the other e-commerce giant, which is number 1 right now. Amazon, I think, will start to lose a bit of market share to Shopify eventually, as people realize on Shopify you can have your own individual branding and you can separate your product from the rest. Branding, I think, is super important for consumers because it helps you connect with the product that you're actually buying and gives you use cases for the product, or just shows, the product in real life. Versus on Amazon, the only thing you see as you scroll down through the number of products that all look the same that are from China, and honestly, you can't really relate to one better than the other one. So I think Shopify is still a better bet as it's got a smaller market cap, larger market opportunity out there, and I think the stock price appreciation looks better on the whole for Shopify in the future. Next, we have Sundial Growers, and honestly, I've never seen this company before. It just popped up on the list. So let's just see what they do. So it looks like they engage in the production and distribution of flour, pre-rolls, and vapes. So it looks like this is a cannabis company, and right now, if you guys haven't been seeing what's been going on in the retail markets, cannabis seems to be taking off again. A lot more YouTubers are talking about different cannabis stocks like Trulieve and Aurora or Afria. I think that cannabis might have another boom with Biden becoming president. I don't plan to cover cannabis just because I personally don't like cannabis at all. That's just a personal choice for me, and I won't be investing any of my cash right now into cannabis. Number 19 on this list is Canopy Growth Corporation, and this is another cannabis company out there. In fact, they are the largest cannabis company out there right now. They got a $4 billion cash infusion from Constellation, which is a beer company, and this really proved the legitimacy of Canopy Growth Corp. I think this is going to be the number 1 player in cannabis over the future, so if you're looking to buy into the number 1 cannabis company, Canopy Growth Corp is probably where you want to go. The 20th stock and the last stock we're talking about today is Pfizer. It trades at $34.99, and Pfizer has been getting more attention just with the rollout of vaccines. They were the first ones to break the news of their vaccine and its efficacy levels, and I think that's why retail investors took a note of this and started buying into Pfizer, hoping for tremendous gains. However, Pfizer being a multi-billion-dollar market cap pharmaceutical company, this vaccine is not really going to move the needle as much as people hope for. So if you're buying into Pfizer, you're buying in more for a dividend play. Anyways, these are the top 20 stocks on Wealthsimple Trade. Let me know down in the comments down below which ones you guys are buying, selling, or diamond handing. Before we end off, let me tell you which stocks that I would consider purchasing today. Personally, the only 2 stocks on this list that I would purchase are Apple as well as Shopify. I think that Amazon and Microsoft are also pretty good plays, but I'm not really interested in those companies. A lot of the companies here I see are relatively high risk, or I just don't see too much long-term growth of them. Overall, I think a lot of these companies will eventually go up. However, I think the best gains today are probably with Apple and Shopify. That's my personal opinion, and if you agree or disagree, let me know in the comments down below. Remember to turn that like button blue, as well as subscribe, hit that notification bell if you're new here, and check out these 2 videos if you're interested in growth stocks. If you're there, I'll see you there. If not, keep up the grind and have a great day.